and we will talk a little bit about patience, because in this market, it is very important to be patient with the setups that you want to take, and that you don't want to over rush on anything that you're doing. Because if you're being in a rush mood, you will try to see sells or buys, or get a directional bias in the market, whereby that directional bias is not really there, because you're impatient. You want it to be there, and when you want something to be there, it will always be there. But in this market, it is not the meaning that we're trying to seek for something. We have to react to the things that occur in the market. So when we see things happening and we see our setup, then we need to act on it. But it's not like that we need to be looking for that shit. No, you're trying to make money to get freedom. So if you're not seeing anything, enjoy your freedom. And if your alert goes off and you see a nice entry, then you should go and start looking for some entries. And I would like to compare this with like a situation in normal life. Whenever you go to the train, you can do two things. In Holland, we have like a sprinter and we have an intercity. And thereby the sprinter goes more often than the intercity, but the sprinter is also slower and stops at more stops. So that means if you will take the sprinter that is coming in 1 minute, you will be quicker in the train. But that doesn't mean that the sprinter will be a better idea to take if you want to get home as fast as possible. So if we compare this with profits and with making money, it doesn't mean that if you just see a setup that seems like a setup, that you need to take it just because it is there, because you don't know if it will make money, because we are unknown in this market. So please stay patient and wait before the real move to happen. Wait for that intercity train that will take you home, that will bring you your profits in a better, safer, and quicker way. Because you don't want to be stopping at any stop, you know. Just take your setup, follow your setup, and be patient. And the reason why we took this topic today for this session is because last week, for me, it was not a very, it was a volatile week, but it was not a week where we get a lot of nice, clean entries. So what does it mean if we don't get, or we don't see a lot of clean entries? That means we don't enter a lot. It's that simple. 1 week we can make 1,000 pips, and another week we'll make 100. Because we are not the ones that decide how much pips we make, as we are the creator of our belief system, and thereby we can create how much we want to make. But if the market is not giving us a setup, or our eyes are not seeing a clean setup, that means that we don't take a setup. So like we always do, we start at a higher time frame to get our directional bias, to see where we're heading, and to see what we are going to do. And if we look at GU, and we look at how GU ended last week, we can see on a weekly time frame, we finally dipped below this low. And what do you guys think that is gonna be standing or resting below this low? There was resting a lot of liquidity, a lot of money below this low, because people were trying to buy from this support level. This psychological level of reaction for retail traders is where people have been traded from. So that means that they are going to place their stop loss, their pocket of money, below that low. And what can we see that this wick did when we broke below that low? That wick kicked them out. So that means that we have in mind that there might be a possibility that this week we are going to go up. But again, we need to be patient. So we need to wait for a setup that can give us that direction and can give us that momentum to indeed take that buy to the upside. Because on the other hand, this still looks like equal lows, right? So that means it could also be that we get an induction for some days and then go even further to the downside. But that's why we need to wait, and that's why we need to be patient and only take a setup if we're seeing a setup. And if you look like how the week opened this week, you can see it opened with a gap on a daily time frame, and again we came underneath this low. But now not only with a wick, but with a part of our body. So that means that a lot of people are trying to sell this move and are stepping into the market for sells. And when people are trying to sell a move, what are we trying to do, or where are we gonna anticipate on? Buy. I'm gonna buy, man. Buy. It's a big tune, man. It's a big tune, man. We're trying to buy the move, of course, because we want to be on the other side of the market than most people are. But that always means that if our bias is on a weekly and on a daily time frame, that we might have a possibility of going up, we need to be patient and we need to be looking at lower time frames for that same bias. We need to get the same entry or the same directional bias before we can enter the trade, because we want different time frames to overlap. We don't want a weekly time frame to say buy while our 50 minutes is saying sells, because that means that we have a disconnection between the two time frames. We want it to be together on it, like the weekly, daily, 1 hour and 4 hour at minimum needs to be the same to be taking that entry. So we're gonna look and we take our daily candle as our last candle that went below, so the candle that we need to be looking at, and we look at the 4 hour, that how it looks, then we can see that it is very choppy, right? It's not a clean move. It's even ugly. But we can see if we simplify it, that this is our last candle before we were moving up. And what is the rule that we have when we are talking about an impulsive move? When we are talking about an impulsive move, we mean an engulfing candle. And not one candle, but it needs to be an engulfing move. So if we are looking at this move and we see this is the open of that candle that broke us below the zone, and that gave us the up momentum, then we can see that over here we break above the open of that candle. So we have engulfed this move. So that means that for now, this becomes our institutional candle, our last down candle before the up move. So that also means that we need to be aware that there might be a possibility of buying when we reach back into that candle. And we'll take the 50% of that candle right over here. But now we already see what happened. We already see that it bought. But if we are looking at it like this, it's not very, very, very clean, because it's very choppy around here, right? So over here, you wouldn't say instantly, oh yes, we're gonna buy for sure. And when it looks like this and it's not that clean, it just means we need to go lower. We need to go on a lower time frame and seek for further confirmation over there. And we can see we have a lot of choppiness right here, a lot of consolidation or accumulation, pending orders, people stepping in for buys, people stepping in for sells. And where do we see momentum coming back into the market again? It's at this place. But again, we don't have a clear confirmation or a clear candle, a nice imbalance or a nice candle over here that we can detect. So we're just going to go on a lower time frame. We're going to start looking at that lower time frame. And what we can see right there is we had a move up, retraced, move up. So this was our shift in momentum. So when we have our shift in momentum, we know that there's a big chance that we're not going to get back all the way to this low, because we are coming back all the way to the low. People that were trying to sell it right here are going to step out of the market because they see what's happening and they're going to see this as a support. So this falls away for me. So I see a retracement here, momentum up, retracement back in that candle, retracement up, down, up. And this is, again, is an impulsive move. And at which place do we have this impulsive move? That move is happening right at the moment that people are getting induced to sell this. They are creating one high, second high, third high, and then an engulfing candle to the downside while we are in a downtrend. So people are selling this move, and then we have our impulsive move again. And this impulsive move left one little thing behind. We got here a small imbalance. It's the wrong one. We got here imbalance. So that means that if we look at this momentum, at this price action right over here, and we don't see a clear candle, but we have a candle that left a big impulsive move and an imbalance with it, we know that we have a big chance that that will give us a reaction. But when we want to see a reaction, we again need to be patient and we need to start looking for the same confirmation. So what we can see is on Tuesday, because there was Monday, we see that on Tuesday we had our shift in momentum. We broke above the trend line and we get at our support. And from that support, we are inducing buyers, right? They're stepping a lot of buyers into the market right here. So we know that if we want to go up like we want to do, we don't want to buy at this support. Just because too many people are already trying to step in right there. So we want daily structure that is in line with the move that we want to take. So that means we want an accumulation, a break to the low, back into our beloved zone, and then price action that shows us that we are going to get up. So we will look at that and we'll see the next day. We can see that indeed we broke below the low. We are kicking out buyers right now, but on the same hand, we can see we're not inducing sellers yet. So that means that if you want to enter right here because you think this is already the candle that will bring us up, you can do it, for example, from the 50%, but it means that you need to get your stop loss below this candle because this is also still a point of interest that we can get our reaction from. So it's not a bad thing if you want to enter a little bit earlier, but when you're trying to enter earlier, you need to be aware that you are entering earlier. So that means you have to adjust. You have to change, adjust. You have to adjust your stop loss to the timing that you are taking action on. So for me personally, I would like to wait to see first that induction before we are moving up. So that means that I want people to see that we have a little bit of a retracement back into our zone, and then candles that are bringing us down. And what can we see right now? We can see that we came back into our last candle with our imbalance that's filled now before the move up. So that means that we are gonna take a buy right over here. And why are we taking a buy right over here and not here? Because we had our retracement and then again engulfing candles. So everybody that have read Candlestick Bible is using support resistance will be selling this move to get back to this support or break these lows. But we know that that is not going to happen because we already analyzed on a higher time frame that we are just inducing sellers. For now, we broke below a low, we dipped below a low on the weekly, and we know that we might get our up momentum but we're not sure, of course, because we always need to wait. So before we can enter this move, we have to choose to where we want to take this move. Because if we're not setting targets, how are we gonna take profit then? If you're not knowing where you want to get to, how do you know how to take your risk? Because if I would enter here and I take it below these lows for 15 pips, and I don't know where I want to step out of the market, I don't know if this is my trade, because we need a 1, 2, 3 risk reward. So for me, if I look at last week, my first target would be around these wicks, or my but a little bit further target, because I always like to take partials, or we like to take partials. So that means this is already a 140 pip move. If you're taking your first take profit right over there, you're not paying yourself. You need to know that you always need to pay yourself while the market is moving, because we don't know if it will react from this highs or this high or this high or this high. So that means if we just try to take it all the way up, sometimes we will get our take profit and we will earn a lot of money, but also a lot of times price will come back and we'll get fucked up and we'll not win money. So that means that our first take profit will be a little bit lower, and because it's a higher time frame analysis, I would like to take it towards this high. So over here we already get a nice 1 to 4.5 or 1 to 5 risk reward. The second one, we will take it towards this highs, because we can see these two wicks have wiped out liquidity. It has wiped out this liquidity right over here, but it's on a lower time frame. So if we look further now, it has become equal highs. So after this engulfing candle, it might be the truth that people were stepping in anyways. So there's again liquidity above these highs. And our last would be at the high of last week. So we have 3 entries over here, 3 positions that you could take, and that you have to adjust your risk management on. So don't try to enter with too much risk, but know what you're doing and know what you're waiting for. And as we can see how the market will play out, we can even see that before we get our move to the upside, what did we do one more time? We made sure that even more people stepped into this market. We made sure that even more people are going to sell this move, because that means that if more people are going to sell this move, there's going to be more liquidity resting above, so more money for the banks. And as we can see how this week played out for the rest of the week, it will mean that we would hit all our take profits, and we were even below. We could even take more. So that means we have a risk reward at the last one of 1 to 18. So please be patient. Analyze in the right manner. Analyze from higher time frames towards lower time frames until it's clear for yourself. And if it's not clear, it just means that you don't need to take anything, because you need to be patient and wait for moves that are gonna pay a lot. And paying a lot means a minimum of 1 to 3 risk reward. So you don't need to be aiming for this 1 to 18. It's nice, it's perfect, but you don't know. So there's no need to be aiming for that. You already need to be satisfied with a 1 to 3 risk reward, because that will already make you a millionaire. All right, Safi's gonna do some stuff. Let the goat do his thing.
Thank you, Sam.
Pew, 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 pew.
Thank you,
Can
Sam.
I get a pew, 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 pew in the chat, please, if everybody's a little bit fired up?
Pew, 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 pew. I'm gonna do a short short piece. This session, I'm gonna go over the higher time frame premise on why it's important. Some was talking about why you should make your analysis from higher time frame to lower time frames, but we need to anticipate on certain zones. And I'm gonna talk about those zones, and I'm gonna do it on USD. So when we are looking at higher time frames, it is important to look for certain areas. And what kind of areas do I mean? I mean the institutional areas. The institutional areas where the big orders are placed. The really big orders, because institutions, when they enter the market, they enter big, with big positions. So we will always play, most of the times we will play within big zones of institutions. So if we look at EURUSD at the monthly time frame, and we will start from this on the monthly time frame, and it will be a little bit of a lesson. So take notes. It's important to take notes. And the first thing I want to talk about is look for old highs and lows within the market where we had a significant reaction the other side. So I will write it down for you. Look for old lows and highs where the price significant reaction. So why do I say this? Is when we look at market structure on a higher time frame, and we need to determine where institutions are placing their orders, we have to look at the areas when the price is moving fast. So if we look at the monthly time frame, we will look for areas such as this. Because what did we do? We went up, upward momentum, and we had a significant reaction to the other side. So this was a previous lower high, an old high. Is this our first significant area where we could see a potential entry from on a higher time frame? Because when you are looking at your charts and you are making analysis, the lower time frame, it's good. It's good for the patterns, for the reactions on lower time frames, but you need to have a directional bias on a higher time frame. Where is price heading to? Because the price is always heading to certain price points within the market. They will go from one order to another order, and they are heading it on a bigger scale. So keep that in mind. So when we look at this area, this significant last high, and we will look to the left, what can we see? What can we see in this whole move? If we look at certain price points, what the price did in the previous market structure, we can see that at this low, there was a lot of buying. A lot of buying. This low, also a lot of buying. This low, we can also see a lot of buying, and even on this low and this low. So all these areas are big areas of buying. So areas where we could look for where price will be heading into the future. But if we look at this low right here, and I put this away, and then I'll put my rectangle, this was an institutional candle in previous market structure. This was once an institutional candle, but at this point in the market, we broke this institutional candle. So the positions that the big boys had in this place are at this point in drawdown, right? And we need to remember that the institutions and the banks, they are the market. So they can stand drawdown for years, for months, for their whole life. It doesn't matter because they are the market. So even at this point, in this institutional candle, you can see that we had a lot of buying up. We broke it down. And what did we do next? We were heading into this price point to take a sell from. So if we will look what USD did at this point in the market, I already did some explaining about the move of EURUSD in London, but now I will mainly focus just on the higher time frame and just end it with an analysis just for the people at home to make it more sure and have more knowledge about the knowledge we were sharing in London. So this was our last down candle on the monthly before our move went up. We mitigated with this move out of this candle. So at the moment that we mitigate out of this move, and we had a significant reaction, this whole area right here becomes interesting for us. And why? If we look at what we did right here, and I will take it back to the weekly. This was also an area of accumulation and a big buy move. So this was an area of old lows. Old lows where big institutions could have their orders. And how could we see their orders is when we take it back to the monthly. Is look for this up candle, this down candle, I mean, this down candle, and the low of this down candle. And we will look back in history. We can see that even at these areas right here, we can see a lot of buying within this zone. We got a buy here, we got a big buy here, we got a big buy here. You have to remember that this is on a weekly time frame right now. We even had a buy right here, we had a buy right here, and we had a buy right here. So what we could say is that institutions were mostly placing their orders within 108 and 106. 106. All right. So when we will enter the zone again for where the price is heading, because at this point, if we look at old highs and old lows, with the knowledge you just got from me, we had this significant high right here, and we had this significant low right here, where the price went fast up. So at the moment that we will enter this whole big zone, we can think about buys. So that doesn't mean that when we enter the top of this line, we will just immediately buy. No, it just means that, just like Sam said, we have to go and look for evidence on lower time frames and work our way up from the monthly to the 30 minutes to look for evidence that we can make the buy. So look for areas of old lows and highs where the price had a significant reaction. Yeah, there was also a big imbalance that was even nicer because it was just giving us more evidence that we could make a big move up. And just like you see, when we entered this zone, we tipped below, a few pips below, and we went rampage on this move. We went like, where's the meter? We went like almost 600 pips for EURUSD in 2 weeks, up. Look at how price was reacting all year long, last year. We entered a significant zone, and we engulfed almost like all the structure from last year, right? So keep in mind that the institutions have a lot of impact within this market. So the second thing I want to talk about is look for areas of range expansion and range contraction. And what do I mean by that? Is that it's just like a consolidation and a fast move. So even this, you can do it on a monthly time frame. And you will look for certain areas. What price always will do is that they will accumulate a lot of the time, just like here, but the price will go, it will go, not go anywhere. So what this means is we just go up, we go down, we go up, we go down, and the prices were literally doing nothing. And that is what I mean by range contraction. And what is range expansion then? Range expansion is the other side. After we had an contraction, there comes like a range expansion. And when a range expansion happens, we will go big. Just like here, we were in a range contraction. The price did literally nothing. We went up, we went down, we went up, we went down. And even on the weekly, you can see it better. This area right here was just a range contraction. We went from this high to this low, and we played almost all this time within this zone. So this is a range contraction. So what comes after range contractions? When we are approaching a significant area of old highs and lows. At the moment that we see above an old high or old low, a range contraction for a longer time, we can expect a liquidity grab below these lows to bring us eventually the other side of the market. Right? So for range expansion and range contraction, is that a little bit clear for everyone right now? And the areas of old highs and old lows, give me a 222 in the chat. 22222. I want to see 222. I want to see 222. 222. So we need to anticipate on these kinds of zones and have to remember that after range contraction comes a range expansion. So what we see right here is a range expansion. All right? So this is what I had to talk about the lesson. I will do a little bit of an analysis on EURUSD on what I see right now. Is we were talking about this big zone that mitigated out of the previous price point. So if we look, this whole area becomes interesting for me now, because this is an old high where we had a range expansion after. On our way down, we created a lot of liquidity below because the price was in a really long time just consolidating or like in a range contraction. So if I remove this, so now I mark up my monthly zone. And I will not take it only to the monthly, we will work our way down. So when I go to the weekly, and we see all of this mess right here, this range contraction, this consolidation of accumulation, I don't know how you call it, it's just a lot of ka-ching above. So if we are playing within this whole big zone, it's like a zone of 1,000 pips. We have a big area to look at, right? But if I need to look for something specific, we will take our confirmation pupil list with it. So if we see a lot of liquidity right here, we will look for an interesting area above within this big zone that could eventually bring us down. So when I look at this zone, I will look for an area of an old high, just like this high, where we had a significant reaction from. So we have this whole range. And we have this institutional candle above, and we had a range expansion down. So at this particular moment, this area could be for me an interesting area to look for a big sell again that could bring us down. So this is our big zone. If you check it on a daily, you can see that we even grabbed more liquidity. This whole zone right here. And what can we see within this zone? If we look back in history, look at certain price points. We had a buy up, we had a significant reaction down. What can we see in the future? You see how we had this buy, all of these candles right here, and they are closing almost like at the same price points. That means that a lot of institutions were playing within this zone. So it's an important area for us to look at. This candle right here, these candles right here, right here, right here. They were all accumulating all of their orders right here. So that is what makes it for me more important to look at. But if we take it more to a lower time frame, and we need to anticipate on this whole move, what I'm expecting is just first like a big retracement. And why a big retracement? You can see that we are entering a psychological level of resistance. So when we have a range expansion and we moved fast, and after that, we will go one level above. And one level above, what needs to happen? We need to get orders on the other side of the market. So this is a big move. It's a move on a higher time frame. So we have to induce people also on the higher time frame. We have to induce swing traders within this market. So when I'm looking at the retracement and I'm taking it back to the monthly, we see this last down candle that mitigated out of this move for an area of interest. So this whole area right here, with a nice imbalance right here, could be our big buy zone within between 102 and 111. And even when we take it back and we will look back in history again, what can we see? We see this candle prior to this move down. We see this big buy candle. We see this buy candle around this same price level. And we see this buy candle around this same price level. So this area could be a nice area to take us further up. Sounds logical, right? And on this area could like be the catalyst at this moment for me to bring this move further down to break all of this accumulation. So this is like an analysis on this, like a yearly analysis. This could play out in a few months, in a year, in 2 years, I don't know. But it's just a long-term analysis. I hope you got something from it. And
the funny part is you always need to remember that everything that we teach that is based upon weekly time frames, monthly time frames, yearly time frames, is the same on the 30 minutes, the same on the 50 minutes, same on the 1 hour. But it's important to always be aware that there are different time frames playing out, and that you need to analyze them all, or at least from weekly if you want to be an intraday trader, in our opinion, to bring that patience more in line with intraday moves. If you want to get confident in your moves, don't only be sitting around the 30 minutes, because you will lose your confidence, because there's so much happening every time. So
it's a pew thing.
Yeah, man.
It's a pew thing. Thank you for this session. I hope you got some value out of it. And we will be back with more sauce, with even better sessions. So
keep on improving, keep on backtesting, guys. Keep doing your thing. Love you all. This one will be on YouTube, so please subscribe and like, and take action on it. Wealthy moves, fam.
Wealthy moves, fam.
Stay woke.
Stay woke. Create yourself.